Welcome back to the Dividend Diplomats YouTube channel. You got your boys here, Lanny and Bert, the Dividend Diplomats. In this video, we are pumped up. We are excited. We are going to talk to you about my two favorite dividend stocks that are showing some serious signs of value right now.
Guys, you know the drill. Smash that subscribe button. Give us a nice thumbs up. We're trying to get to 20K, and your ass is going to help these boys get there. Bert's got another two stocks on his list. In this ever so volatile stock market, one is almost a dividend aristocrat. One is a dividend aristocrat. Bert, you haven't bought a stock, I'm sure, in a while.
Yeah, it's been a
And
hot minute here, Lanny, because market's been on fire. Look at the S&P 500. Earnings season, that recession, that big stock dip that everybody was predicting over the last 3 months, Lanny, has never come. In fact, it's gone in the other direction. It just keeps going up. Everyone's like, oh, my friends. Jerome Powell's like, I gotta cut rates now. Everything is wild. With that, though, it's been really hard to find undervalued dividend stocks to buy. It's been very, very difficult this earnings season, though, Lanny. There are two opportunities that have kind of presented themselves over the last week. There have been two stocks that I already own that I've watched in 2024. We've talked about them on our channel before that jumped up in price that are now coming back down and getting into some pretty juicy levels where I am very, very interested.
very juicy, guys. Yeah, you've got one that yields almost 4% and one that almost yields 5%. A $12 billion company and a $24 billion by market cap company here, guys. Both stocks down year to date, both stocks down since last year. Bert owns both these stocks. I own both these stocks. And with one of these names, it's got to be good.
It's got to be so good. We're talking about Smucker's, ticker symbol SJM, headquartered in the great state of Ohio, about an hour 20 minutes from Lanny, about
Eh, it's deep down there. It's
yeah,
probably an
probably an
hour
hour
40.
30 minutes from me, depending on which route I take. Smuckers. We love Smuckers. We love the peanut butter. We love the jelly. We love the coffee. We don't really eat them as much though. We love the Hostess. We love some of the other snack foods. They are truly building some of the best brands you could possibly have that are in the grocery store, that are in sectors that you need. Everybody still has their peanut butter. Everyone still has their jelly. Everyone still has their coffee, except for Lanny, in these times, whether things are good or bad.
Yeah, guys, you can always flock to the consumer defensive industry here, and that's exactly what Smuckers is.
Mhm.
Again, they bought the Hostess brand and their product line. Hopefully, get some synergies, some accretion to earnings. Guys, is the name of the game, and you know. Coffee, though the market's getting a little bit saturated, they've got a bunch of ways that they play on coffee. Their Folgers, their Cafe Bustelo, the Dunkin' in-store brand. They kind of toyed and teased around with the Folgers kind of craft brand. I don't know how well that actually did. I haven't seen it on the shelf in the last couple of
No,
years. So
you don't buy Folgers for like luxury craft coffee.
it was it was good. It was like the
Yeah,
1859 or something like that blend.
I don't disagree with you at all. It was very tasty, but that's not the area where Folgers plays. They needed to play in their field of the high volume, good tasting coffee at a reasonable price in those big red plastic tubs.
Those big Folgers tubs, guys.
Mhm.
The best part of waking up is the dividend diplomats on your screen, guys, because we're going to run him through the DD stock screener. Again, this is just the first stock. We're going to have two stocks, aren't we, Bert?
Ooh, that's right. We'll talk through that PE ratio, that payout ratio, that history of increasing dividends, and that dividend yield. And after this, we'll cover a little bit of what happened with Smuckers throughout the week that caused the price to fall. Their PE ratio is under 12 now. Now that their price has come down, their PE ratio is 11.55. They're currently trading at 113.79. To buy that by forward earnings of 985.
Yeah, I mean, pretty low PE ratio, especially in the consumer goods industry here. Payout ratio, relatively safe. Paying quarterly, but in total over the course of 4 quarters, $4.32. So a 44% safe dividend payout ratio for your dividend portfolio. But as we said, we teased it. Smuckers is on their way to being a dividend aristocrat. They are a dividend growth stock. So what does the dividend growth look like for Smuckers?
4.43% 5-year average yield, and they've increased that dividend for 23 consecutive years.
Can they get to 25, Bert? Do you think they will hit that aristocrat status in
Oh,
2026?
as the great Daniel Bryan would say. Yes, 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 yes. They absolutely will. I don't see any reason why Smuckers won't hit it. But the best part is, with that Folgers getting in the cup, Lanny, they're putting that coffee, little extra scoop there in there. Because with the price falling, that yield is climbing. The yield is almost at 4%. It's at 3.80%, 74 basis points above its 5-year average yield of 3.06%.
Bert wants that four horseman, 4% yield on this stock. Down again 12% this year, down 22% since last year. They're trading well above that 5-year dividend yield on average by 74 basis points. Market cap is over 12 billion. You guys know Smuckers that could be in your pantry, that could be in your fridge or even freezer with the Uncrustables. If you have kids, if you know, you know, but there are some knockoffs out there. You might know about that as well.
Yeah.
So, Bert, do you want to talk about Smuckers? I know
Yeah.
they had slightly lowered some sales and
Yeah,
EPS guidance there.
let's rip through that quickly here. They just released earnings. Net sales were 2.1 billion. It increased 18%. Income per diluted share is 174 compared to 24 and adjusted earnings were 244, so it increased 10%. So they saw top and bottom line here growth. But you're right, it was the earnings guidance. It was the revenue guidance. That's really what happened. Cut down sales guidance. So it's only increasing from 8.5 to 9.5 compared to his previous forecast 9.5% to 10.5. So it dropped 1%. Not too bad. It's not as if they're decreasing negative sales now. Adjusted earnings per share, the range is 960 to 10 versus 980 to 1020. Again, not a very big decrease. It just moved 20 cents down. And what happened? Costs shouldn't surprise anybody. Their costs went up, dealing with the higher cost of coffee was one of the things that I saw that they had cited. A lot of their cost of goods sold are going up, but also as consumers' budgets get stretched, we have talked about this. We talked about this, the fast food wars for why McDonald's bringing back the value meal. You've talked about this, why Walmart's doing well. People are flocking to private label to save as much money as they can. So that's why Smuckers, seeing people move away from that Jif and into that Aldi brand peanut butter. That's really what's killing them.
There we have it, Smuckers. Bert, any price point on Smuckers where you'd be a buyer of this stock right now?
Yeah, that's actually an interesting question here. To get the yield to 4%, that cuts it down. Let me see here. Let me just run some numbers. Divided by 0.04. That gets you to 108. And I think you're not really that far off. You're less than $6 a share away from 108. So Smuckers at 4% yield, I will be buying at least one share and returning back to those individual stock purchases. What do you think of that, Lanny?
108 sounds like a damn good plan to me, Bert. Now that's one stock that you're looking to buy. Smuckers at $108. Got it. Another name here on the screen, a name that we featured well on this channel last few years. In fact, we featured two of their competitors last week or so ago with Prudential and Franklin Resources. Bert, roll out the red carpet for this dividend aristocrat stock.
T Row price, ticker symbol TROW. And they didn't have the big earnings release. They didn't have the big guidance drop. T Row moves with the market a lot. Assets under management, that's what drives the business. So stock market prices go up, assets management go up.
That's what drives the
Yeah.
bowel movements.
Yeah, it drives the bottom line because fees off of higher market value, more revenue. Prices come down in the market, less fees. So that's really what's driving it's more market movement, market happenings. Also, the big thing that they did release was they just released earlier in this week their assets under management. Asset management companies every single month do a high level report to show what's going on, what are the inflows, what are the outflows. Assets under management at the end of July were 1.59 trillion versus 1.57 trillion the previous year. So they only had 2 billion of outflows. So not a lot of movement in and out for T Rowe. Things are just chugging along, which is what you want to see. Because in the past with T Rowe, you saw funds leaving, and that's what caused the stock price to tumble fast.
I feel like they're another one that has at or above 1.5 trillion in assets. That's pretty interesting. Again, speaking
Yeah.
on behalf of Prudential and Franklin Resources. They haven't really tipped their toes in the crypto ETF space or fixed income fund space. They kind of stayed away from that right now. So their name is not really in the mix when it comes to like big headliners in the news this year in 2024. But Bert, T. Rowe Price, I own a lot of the stock. I think you own a ton of this stock. It's down about 2 to 3% this year, down 5% since last year. Again, a dividend aristocrat, which has increased well over 25 years, which we'll get into. But it's time to look to see, Bert, if this could be a good stock to buy right now.
Let's look. Let's start that price earnings ratio there at 104.96. Earnings per share of 908. That's a PE ratio of 11.56 per tier.
So almost spot on with Smuckers, guys. Remember, Smuckers was 11.55. So you got 11.56 here with T Rowe. Looking at their dividend payout ratio, again, the safetiness to that dividend. Similarly, you have a safe payout ratio at about 55%, but that might speak a little bit to what we should expect from a dividend growth rate standpoint for T Rowe Price's stock.
Yeah. Yeah, that's perfect though. Their 5-year growth rate's 11%. They've increased that dividend for 37 plus years.
Yeah, no, the last dividend increase was what? I don't know if it was 1% or something like that or
Wasn't
something.
very good. Was not very good for Tro.
No. But, as rates drop, the market continues to soar, pricing in those rate cuts. Economy doesn't seem to be slowing down. You might see the stock market continue to be on fire, especially with a presidential election this year, guys. So again, like we said, it's down, right now this year and as well from last year. You get quite a bit of margin on that 5-year dividend yield average by about 1.44%. The dividend yield is now 4.73%, knocking on the heaven's door of 5%. Just
And you
tune in
know
that.
what? That is my exact price point in there. If T Rowe dips below $100 per share, I have to grab at least one share of T Rowe and possibly even more, that 99.99 or lower.
99.99, guys. Give me that Walmart price point here for Bird on T Rowe. I would love to see you and others add this stock at your price points here, guys. Let us know. Would you buy these two stocks? Are these two stocks to buy right now for your portfolios? Holler at us in the comments.
If you haven't already, subscribe to the channel, give this video a thumbs up, and remember, you're either with us or you're against us, Jack.
That was Bert, the Hurt, and Lanny from the Dividend Diplomats. Over and out.